I have to say, the BOJ surprise, I think, has made people question just in the past few days the stability of central bank trajectory going into next year. Has that changed your views as to the potential volatility and the potential for policy missteps?
Not really, to be honest. The timing of the BOJ was always difficult to pin down. And in fact, if they take another step soon, it's really difficult to be confident about exactly when that might happen. But it is obviously part of this global trend of central banks trying to deal with this inflation challenge and move away from policy settings that they put in place during the pandemic. And even the US numbers last night again highlight that while the inflation shock this year has been a surprise, while the degree of monetary tightening this year has been a surprise, the way activity has handled the aggressive tightening has continued to surprise. Economies actually have continued to do relatively well despite this unprecedented tightening cycle.
How do you characterise the China wildcard? Does it go back to playing that counter-cyclical growth element that we have in previous global recessions? Do you worry about the inflationary upside in the second half?
Look, I think firstly, while terrible for China, we should in a way be a little bit thankful that China was economically softer this year because, of course, the world already had an inflation problem, supply chain problem, commodity price challenge. All of those would have been much bigger if China had been growing much more strongly. I'm certainly in the camp which says China will be recovering over most of next year, and that will probably be at the time that monetary tightening is biting hardest in places like the US and the UK, New Zealand, Australia. And that will provide a bit of a buffer for the global economy. The next couple of months is going to be rocky. We know that the exit from zero COVID or COVID control in every other economy that's done it has been a very challenging period. But, you know, we also have a reasonable template for what things look like once you get through the worst of the rapids and start to get to clearer water.
It's been an interesting December, Richard, a month that usually does pretty well for risk assets. Does it surprise you that given what you're saying about economic activity still remaining resilient, the sentiment has really taken a hit?
Look, I think it's Shery, it's a great point. I think it's calibrating this issue of how successful are central banks in actually achieving their mandates. And it's amazing that I think it's amazing that people still talk about inflation as being primarily supply side driven when we've had these really in the context of recent decades, enormous monetary policy tightening. And yet demand remains pretty resilient. I think demand is a big source of this inflation challenge. And what you'll see next year probably is, yes, inflation comes down, but it doesn't come all the way back to target. And that's going to be, I think, the next hard message the market has to digest.
Where does that leave the US dollar and on the other side of that equation as well, commodities?
I think the US dollar has peaked. The BOJ move that you spoke about in the precursor is a part of that, but really it's been a sequence of, I guess, factors that have really, drove the kind of US dollar haven story for 8 or 9 months of calendar 2022. Part of that was the BOJ's policy. Part of that was kind of fears about whether the war in Europe might escalate beyond the countries that are involved, supply side pressure on commodities, geopolitical challenges, and none of those issues have really evaporated, but certainly they've all diminished in a way which has taken away that kind of dollar exceptionalism piece. And of course, the Fed's not the only game in town. The BOJ now moving, Reserve Bank of Australia, Reserve Bank of New Zealand, ECB, a range of central banks still delivering tightening. So I think, the US dollar has peaked for the cycle. It won't be a runaway decline. I think we'll need the Fed to deliver some easing for that to happen, which is a long, long way away.
What about Australia's economic exceptionalism? Even prior to COVID-0 being dismantled, it looked like we were pretty well placed to avoid a recession. Does this mean there'll be a lot more economic upside, I should say, coming from China next year?
Look, China will help, obviously, but it's hard to say Australia's had a bad year on the commodity price side. Coal prices, iron ore, even gold have all been really at exceptional levels. Lithium prices up many-fold over the course of the last couple of years. I think China's opening will be more a global story than a singular Australia story. Certainly the return of Chinese tourists to the Asian region generally will be very welcomed. I think the recession question in China, in Australia, is just more about can policymakers successfully calibrate the shift to the right policy settings which get inflation back to target without overdoing things too much.